So, welcome to yet another episode or session of our Blue Bindi program, a program that's dedicated to empowering women to be financially independent. Now it's, whenever we talk about finance, it's insurance, especially insurance, it's often a topic that people don't talk about, don't discuss about a lot. One of the reasons while we were preparing for the session, we discussed with people. So we got to know people feel it is superstitious to talk. Some are very suspicious that, okay, what are you selling me? What is happening? What's going to be, what's the fine print? So people don't talk. And one of the things which we found very shocking was that people say, अरे यार शुभ शुभ बोलो, मुझे कुछ नहीं हो रहा है. शुभ शुभ बोलो, ऐसा कुछ नहीं होगा. So, but here's the, truth that avoiding a conversation doesn't avoid crisis. So it's better that we talk about it, we discuss about it. We don't have to fear the topic, we have to understand it. And today, that's what we are going to do. Before we dive into what we all will be talking today, what we'll be discussing, and what are those questions that we will be tackling today with Sailesh, here are some stats that we came across while preparing for the session. So let me just quickly take you all through that. So here we go. Yeah, wait, I'll just. Sorry. Yeah, okay. So here's my PPT. Yeah. So can I make it full screen? So couple of things that we came across, that only 22% of women in India are the primary decision maker when it comes to insurance. Close to 40% women don't know the sum insured or policy details of the health insurance or the life insurance policy that they've taken up. A majority view insurance only as a tax planning tool and not as a protection plan. Maybe this might change with all the changes in our tax regime, the new tax regime that's in place, but still, so far, it's only considered as, one of the tax saving tool. And over 70% rely on their spouses or family members to take decision about the life cover that they should be taking. And see, why are we focusing more on women? It could be the similar case for men as well. But because we're talking for Blue Bindi and by Blue Bindi, so that's the reason we are highlighting stats that are specific to females. Now, before we dive into the session, we, start talking about, questions relevant to insurance, and a lot people have, a lot of it has come through you, ladies only. Before we do that, we have some activity planned, which is actually going to make you think and question that, do you actually know, are you, taking right decisions? And this is again specific to insurance. So let me call Moin, who will take us through this session. Okay. Okay. Sorry. Over to you, Moin.
Thank you, Ritika. Hello, everyone. Hello to all the ladies and I think a couple of gentlemen as well who've joined us today. Great. Good to have you guys here. So, rightly said by Ritika that insurance is a term that we don't really often speak much about. I think we speak about it. We speak for a good 2-3 minutes while discussing with your friends. And then you're suddenly like, छोड़ो यार कुछ और बात करते हैं. I mean, I don't know why, but this has to change. So here we are back with yet another interesting segment where we want to discuss with you on your point of view, because everyone has a different point of view when it comes to insurance. Let's have a look at how each of us looks at different life scenarios. All you got to do is warm up those thumbs and your fingers and punch in an agree or a disagree in the comments section. All right. This time we even have a buzzer that will go as soon as the time's up. So get ready with your answers. And here we go with the first one. I find insurance documents too complex, so I usually skip them. I usually skip reading them. So itne sare pages I can't read karega. So your time starts now. How many of you agree to this? Put in a quick I agree in the comment box. And those who don't agree, be proud and say, no, I go ahead and read all of them. And the timer is running. All right, let's have a look at the comment section. Okay, there are a couple of people who agree, and we have some disagreements as well. Okay, moving on to the next one. I don't know how much insurance cover is actually enough for me. I don't know. I'm 22 years of age. Whether even insurance, whether do I even need to be insured, or I'm 30 years of age. I don't know what cover actually works for me. How many of you agree and how many of you disagree? Let's have a look at the comment section. Okay, comments are coming in. Agree, agree, agree. Okay, a lot of people agree. I know and I disagree. Very nice. And timers running. Okay. Who? A lot of people disagree. All right, let's move on to the next one. I leave all decisions related to insurance to my husband or my father. Simple. मुझे नहीं करना है. Daddy देख लेंगे. या spouse देख लेंगे. How many of you agree to this? Let's have a look at the comment section again. Okay, we disagree. Very nice. We have Deepa and Anusha who say no, we disagree. Very nice. We have some more disagreements coming in. Very nice. Okay. And someone is honestly saying, okay, I agree. Very nice. Full marks for honesty. All right, the time is running out. Okay, time's up. Mahima and Yasmin also disagree. Very nice. All right, let's have a look at the next question. If something happened to my partner, I wouldn't know where our insurance papers are. Oh my God, that is serious. How many of you agree to this? If something happened to my partner, I wouldn't know where our insurance papers are. Let's see how many of you agree and how many of you disagree. Disagree. A lot of people disagreeing to this. Very nice. So you all know where exactly the papers are kept, huh? Okay. Time's up. Time's up. Time's up. And we have someone who says my partner would know. Very nice. So it works both ways. Interesting. Thank you for that, Harsh. All right, moving on to the next question. For me, insurance has mostly been about saving tax. And I think a lot of people here would agree to this. Let's have a look at the comment section. Let's have a look at the comment section. Okay, we have answers flowing in. For me, insurance has mostly been about saving tax. मतलब हाँ, कौन सा इंस्ट्रूमेंट ऐसा जो टैक्स बचाता है बता दो और ले जाओ मेरे पैसे. ठीक है, अभी उसमें कवरेज जितना भी हो, मेरी एज जो भी हो, क्या फर्क पड़ता है? Okay, we have a couple of people who agree to this. Very nice. Again, full marks for honesty. Sailesh, I hope you're taking notes. A lot of people agree to this. We got to change that mindset. All right, I think the time's up. Yes, it is. Before investors agree now, after awareness. Okay, that is Harsh giving in a nice strong point across. Moving on to the next one. Whenever there's a discussion around insurance, I tend to zone out. Interesting. Let's see how many of you agree and how many of you disagree to this. Whenever there's a discussion around insurance, I tend to zone out. Let's have a look at the comment section. And a lot of people disagreeing. Very nice. And time's up for this one as well. Okay. A lot of people disagreeing. Very nice. So you guys are actively paying attention, however, not really going forward and buying those insurances that you would need. Maybe today's session will add a lot of value. All right, moving on to the next one. I only have health insurance because my company made it mandatory. Okay. Let's have a look at what the people have to say to this one. Disagree, disagree, disagree. Okay. Very nice. This actually means that you'll have actually gone ahead and taken a separate health coverage for yourself, which is absolutely commendable. Very nice. Someone says, I have a separate insurance as well. Very nice. We don't know in today's world, I mean, what kind of expenses you would incur once you are in an hospital in an unforeseen situation. So good to know that you'll have multiple insurances. And I think the time's up. Yes, it is. Cool. Let us look at the next one. I feel awkward bringing up financial protection or insurance at home. Oh, let's see what you guys have to say to this one. Is it really fine to speak about insurance while at home and with your parents or with your spouse? No, the world has changed. Nice to know that so many people disagree, but it's fine to talk about it with family, with your spouse, have a have a proper discussion about it and have a proper plan in place. Very nice. And time's up for this one. Good to know so many disagree to this. And that I think brings us to the last one in this segment. If someone asked me what my insurance covers, I wouldn't be able to clearly explain. Ah, this is a tricky one. I don't know if you've actually gone ahead and read all those pages that actually explain what your policy covers and what it skips, which is very important in today's world. Let's see what you guys have to say. Yes, some people agree, and we have a couple of more agreements in the question in the comments box, and a couple of them disagree as well. And time's up. Well, okay, there are some more coming in. We'll consider these as well. So thank you. Thank you for actively taking part in this segment. We all know where we all stand when it comes to our expertise and knowledge in the insurance space. And you guys are at the right time, at the right place. We have Sailesh, who would be taking us through a lot of critical points that you should consider in this entire journey of, how to go about and place yourself in the insurance world. I would like to call upon Ritika to please come forward and take the session forward. Thank you.
Thank you so much, Moin, for setting the platform right. Now moving forward, let me bring Selesh. Let me get him and let's dive deeper into, understanding what insurance is all about. We'll be talking about life insurance and health insurance. These are the two segments we'll cover. I hope Salesh is here.
Hi, Ritika. Thank you for giving me this opportunity to be on this platform to share my thoughts and share my experience with you and the entire audience. So there are a lot of thoughts that I've kind of advised a lot of clients about how to manage the risk on life and health, and that is when I realized the importance of insurance. Yeah, there's some audio disturbance. Yeah, okay. It's taken care of. See. So, yeah, actually, Ritika, I just wanted to share some thoughts before we start the session. And, basically, where does insurance fit in the whole scheme of things? See, uh, we during our active working life, we are very much interested in making money. Okay, whether it is through a profession or whether it is through investments. Okay, so while we have this entire journey in our career, say typically our careers start from 25th year of our life and goes on till say 60th year when we retire. So there's 35 active years, where we would like to earn and multiply our wealth. But along this journey, there is always a risk. Okay, there is a risk management, and there is basically, uh, what do you say? Uh, when I say risk, I'm talking about risk on health, uh, risk of life. So there is a possibility that uh, a person may die too early, and that is where the insurance sets in. Okay, but more importantly, this risk, again, research shows that how does this risk play out, and I would like to share one graphic with you, where we say there are three risks that we encounter. One is with respect to uh, you know uh, say if we are temporarily without a job, okay, for whatever reason, okay, so do I have a contingency plan in place? That is one thing. Second is if I you know kind of fall sick and I'm hospitalized, then there is a health risk, and do I have a health insurance in place? Third is the life insurance, where there is a risk on my entire life. Okay, so basically, in terms of order, if you see, the most common or the likely is the risk of without being without a job or something. That is where you need to have a contingency fund in place to manage your risk. Second is the rather than saying what is the probability of someone dying early, the probability of falling sick is more, it's higher. So you need to have a health insurance in plan first and then a life insurance. Why I'm saying all this is that because many individuals have come and said that they have limited funds, they want to invest, they want to buy insurance, so everything comes with at a cost. So how do they prioritize this? And I have always told them that to prioritize, you need to first look at your contingency fund and then the health insurance, and then go ahead and buy a life insurance. But when we say prioritize, that doesn't mean that you have a inordinate delays in buying a health insurance. Okay, it should not be the case. Basically, uh, you need to first buy a health insurance, and then in the order you need to buy a life insurance. So that is the order. So that is the importance of having insurance in your portfolio. So with that note, I would like to begin, and I'm sure my audience would agree the importance of having both the health insurance and the life insurance.
Yes, thanks, Sailesh, for sorry, just sorry. Thanks, Sailesh, for setting the context for all of us. Before we get into the questions, as I mentioned earlier, we will be specifically, talking around life insurance and health insurance. So we have some of the questions that we had asked our audience to share with us earlier. We'll go through those, and towards the end, whoever has their specific questions, and if they're not asked, while we're discussing the ones that we already have, would request you all to put it in the Q&A section, and then Salish will address those as well. Okay. So now to start, as I mentioned, we'll start with life insurance. So Salish, the first one is, what's the minimum insurance every woman should have, be it life, term, or personal accident?
Okay, so this question covers two types of insurance. One is a personal accident and the life insurance. Now, there is a thumb rule which experts like follow in buying insurance. Now, there are the thumb rule is that whatever your income is, you should have 15 to 20 times the cover. So, if someone is having a income of say 10 lakh rupees, and that individual needs to have a life insurance cover of 1.5 crores or 2 crore. This is a thumb rule again, and if you want more exact calculation, then there is a human life value calculator on online. You can use that, and it will tell you precisely how much insurance cover you need to take. But more often than not, we've seen this thumb rule works quite well, and many times insurance companies also don't give you a higher cover. So it could be that some person may be able to afford to pay the premium and want to buy a 5 crore cover for someone who's earning say 10 lakh rupees. Insurance company will not give that cover because there is an eligibility clause also. So normally insurance companies give you cover only up to 15 to 20 times of your income, and that is why they ask you for your pay slip and income tax returns and all,
Yes.
to ensure that you're not buying extra insurance cover.
Right.
So that's the thumb rule. Now coming to personal accident cover. What is personal accident cover in the first place? So this is a policy. Basically, if someone is partially or totally disabled, and if he is permanently disabled, so say someone who met with an accident or anything, a mini mishap, and he or she is temporarily or permanently disabled, and there could be total or partial disability. In that case, the life insurance is not useful, because life insurance comes in only when there is no life. I mean, the person dies. But what happens if a person who was a breadwinner actually is now totally disabled and the family has no source of income? In that case, the personal accident policy comes in handy. Okay, so this policy also should be equivalent to the life insurance cover. So a person may have, say, a 1.5 crore life insurance cover, and he or she may have only 10 lakh personal accident cover. Then that cover is not adequate, because say a breadwinner is completely paralyzed for the rest of his life and he is not able to work anymore, the family will need that insurance cover, which otherwise would be available through a life insurance. So that is how the logic works.
Okay. Moving forward, this is again, I think a lot of people ask this, that if I'm single, okay, and I don't have dependents, do I still need a life insurance? So now that you've mentioned personal accident and either, I mean, if you have dependents, then obviously you need these. But if I'm single, then what it should?
So one is, do you have dependents? So if you don't have dependents, then there is no need for a life insurance cover. Okay. The idea of life insurance is to replace income. Okay. So if there is, say, husband, wife, and a child, and husband is a breadwinner, and suppose he's not there, and who will replace his income? That is where the insurance cover or the claim will replace that income which the husband was earning. Okay. So if there is no dependent, then who is going to take the claim, or who is that claim for? That is the logic. So you don't need to buy life insurance cover if there is no dependent. Okay. Now you mentioned that whether someone is single and he or she needs to take a life insurance. So if you are single and suppose you are just out of your, you just started your career, and till now you were dependent on your parents. So your parents would have, bought a life insurance for them, and because you were dependent, so that life insurance policy was for you. So suppose something happens to your parent, but now that you are single and you are started to work, suppose your parents are dependent on you, and you are the breadwinner now, then you need to buy that life insurance cover. Okay. Like I said, at that moment, whatever your income is, your eligibility will be only up to that. So if say you're starting with a package of say 8 lakh rupees or 10 lakh rupees, then you will not get more than 1.5 crores cover. Okay. So that is how life insurance policy works. Second is that as you grow in your career and you are more dependent, so you start your family and all, you can increase your life insurance cover, and you should increase, because there is a dependent and your responsibilities have gone up and more people are dependent on your income. So you need to up your insurance cover. So it's not that you buy it only once. As and when your liability responsibilities go up, you need to increase the life insurance cover.
So just in this only, Salesh, so if you don't have dependents, okay, but you are working, okay, so shouldn't that individual take a personal accident cover or something like that? If you don't have dependents, but what if something happens to you, right? You will be dependent on somebody. So if you don't have dependents, life insurance obviously doesn't make sense, but a personal accident cover would make sense for that person.
Absolutely. I think that's a very valid point. So even if you don't need to buy a life insurance cover, you need to buy that personal accident cover to ensure that your income is replaced. So while you will be alive and you don't have dependents, that money that comes from the personal accident cover is suffice, to take care of your life.
True. Okay. Moving forward, so this is again, this is even my question in a way. So how do I know if I'm underinsured or overinsured? Is there any formula or a thumb rule that I need to, keep in mind?
So I just mentioned the thumb rule is the 15x to 20x your income. Okay. So now this thumb rule is pretty much valid, like I said, and it is, it works in most of the cases. So basically, why is it 15 and 28? What is the logic behind this? Is that if I am earning, say, 10 lakh rupees a year, I have a certain standard of living and a certain life goals to be met out of that 10 lakhs. And I'm assuming that if, I will continue to grow on my career and my income will keep going up. So if that income is not there, then how does the family replace the income? Okay. Or how do they maintain the same standard of living? So the thumb rule, if applied, so that 1.5 crore, if the breadwinner is not there who was earning 10 lakh rupees, insurance companies pays 1.5 crore claim. Okay, that family goes and parks that 1.5 crores into, say, a bank FD, and that fetches you, say, for example, 6-7% interest. So that 7% on, say, 1.5 crores will be 10.5 lakh rupees will be the income replacement that will start. That is how the cover should work. That is why a lot of portfolios, when we see while they're doing the SIPs and all, they're not buying adequate life insurance because it is, nobody thinks of risk. Everybody is, while the going is good, yes, nobody wants to think negative. Like you mentioned, Ritika, people want to think only good, and they don't want, apne bola shubh. That is where the problem starts, where, while thinking everything is hunky dory, you miss out on the risky part of your life. And that is where this, that is why this thumb rule is 15x to 20x.
Adding to this point only, Salesh, if it's me and my husband, okay, both of us are earning, so both of us should be taking life insurance. If obviously we would have our parents or kids as our dependents. So again, the same rule will apply. We combine our annual income and then multiply 15x, 20x, and that should be the cover. That should be minimum, at least we should be considering for ourselves, correct?
So if I say if both husband and wife are working, okay, and both are, both income are sizable, okay, and both are contributing to the family finance, then both need to take this life insurance cover, which will be 15 to 20 times their income. But many cases we've seen that, say, a husband is the main, breadwinner, and say a wife is doing a small business or any other, small. She is contributing in a small way. For example, typically that we find in Indian homes. In that case, the wife need not take, because the family is not dependent on her income. If she's just supplementing it in some way or other, if she's doing a small business, which is not really a major chunk of the family's income, then she may not need to buy the life insurance cover.
Okay. Next thing that I wanted to ask, and this was again one of the questions that was that we received, that suppose today you start your career and you have your family, you have a husband and a kid. So you would have calculated as per your thumb rule 15, 20x. Now, obviously, your income is growing. Okay. So earlier you took a coverage, say, of 1 crore. Now over the years your family grows, your dependents grow. So do you think you should take another cover, or is there a way to increase your existing policy or something? Because again, as you rightly said, the lifestyle that is there, the family would want to maintain that, correct? So what should one do in that case?
Yeah. So let me explain. Suppose someone is 25 years, started a career with a 10 lakh rupees package. So like as per applying 15x rule, suppose he or she bought a 1.5 crore cover. Okay. Now, assuming that 5 years down the line, the income has gone to 20 lakhs. Okay. So the cover should be at least 2 crores. So there is a need for another 50 lakh. So you should not discontinue your first policy. So if you've started your first policy at 25 and assuming and this cover should go up to retirement. So assuming you're retired 60, the first policy tenure should be 35 years. Now, if there is a significant change in your income level, then that should be, if you want to up the cover, insurance cover, then you need to buy another. You will get another 50 lakh cover only. It's not that you go and buy another 2 crore cover. Okay, because every time insurance company you buy an insurance cover, the insurance company will check whether you already have a cover. So it's not that I have a 1.5 crore cover and now my salary is 20 lakhs, so I'll buy another 2 crore cover. Then the total cover will become 3.5 crores, which is equivalent to my 35 lakhs salary package. So it doesn't work that way. That is one thing. But yes, as you keep growing, you need to increase your life insurance cover. Now, there is one more important point over here. While you are working, you will also be investing and building assets. So you'll be buying mutual funds, you'll be investing in PPF, you will have your EPF. You're also building your assets. So that money is also available to the family. So when you calculate the total cover, so like I said, if you have a 20 lakh package and you need to, have say say a 3 lakh cover, 3 crore cover. Then if you already made, say, another asset of 25 lakh rupees, then that additional insurance cover should be reduced by that. So your assets will keep building and, you will need less and less of insurance as you grow. That is why we always tell that you keep buying separate policies and at some moment, if you have built enough assets, then you may even want to discontinue one policy or two policies. Suppose you've got 3 policies and you built enough assets and you don't want your family is even, with your assets is going to be comfortable, then you can discontinue one policy and save on the premium, or rather increase your SIPs.
Yeah, this makes sense. This is so you can add on as you
Correct.
need more, and now parallelly you're building wealth for yourself. So do that calculation right, and then take it.
Exactly.
Yeah. Okay. What are the real benefits of term life insurance and your traditional LIC? Initially, moreover, those endowment plans. So, what is the benefit of say term life if you take and these other endowment plans? You had to
So
compare.
there are 2 forms of insurance. One is pure risk protection, which we call the term plans, and then there are investment linked plans. Okay. So when I say term plan, you're purely covering the risk on your life. So suppose you buy a cover for 30 years, you pay 10,000 rupees premium. For 30 years, you paid 10,000 rupees and nothing happens to you, then that policy expires. And assuming you would have built your assets on which your family will be dependent. So that's a pure risk protection. And that there is another way to buy insurances, to buy a traditional form of insurance policies where you are buying insurance policies which are also giving a link to investments. So some of these plans are known as endowment plans where you pay a premium, a part of the premium is invested and a part of the premium is used to cover your life. Okay. So that basically over there, when you buy an endowment plan, that money keeps compounding over the years, that over the tenure of the policy. And in case something happens to the life insured, then whatever the value of the investment is, and the sum insured, that is paid as a claim to the family. Okay, so that is how these life insurance policies work. So needless to say that pure term plans are very low on premiums. So they are very much affordable and they work in the true sense what insurance is supposed to be. But because people typically don't like to only pay premium because उनको ऐसा लगता है कि कहीं पे जाके उनका पैसा waste हो रहा है. That money is going down the drain, and for if you are lucky, you not use
You
it
don't
in
die.
life, you don't die, then you feel alright. That
Waste.
money is gone waste. So instead of getting that feeling, you can buy a traditional form of life insurance plan also, where there is investment value, so you don't feel that the money is wasted. Okay, so you get on maturity, if a person survives that policy tenure, on maturity, he'll get whatever the value is of that policy back. So it's also a saving plan in a way.
So people can decide basis if you not investing enough or don't think and you have that feeling कि वो waste नहीं करना है उतने भी पैसे, तो then they can select whichever plan they would want. Okay. This is gonna change now. So this question is like, is buying insurance just for tax saving a bad strategy? Can it also be a part of smart investment plan?
So if you're buying any insurance, whether it's health insurance to take benefit under Section 80D, or you're buying life insurance to take benefit under Section 80C, then I think it's not a wise decision. Okay. Yes, you get incentivized, but if you think the purpose these deductions were introduced under is basically to motivate people to buy life insurance and health insurance. So if you are motivated, then you need not depend on these sections. Anyway, we have a new tax regime now where these deductions are not available.
Yes, yes.
So basically, all those who have been buying, they should continue even if they fall under the new regime. If they think that new regime is more beneficial, there is low tax liability over there, and they shift there, they should not stop their life insurance just because they're not getting any tax benefit. And if someone is starting a career and under the new regime, they should not feel that I don't have a benefit tax saving incentive, so I will not buy health and life insurance. It should not work that way. So till now, it was an added benefit, but it may not work in the future. But purely, see what happens is I have seen a lot of typically in Jan month of every financial year, Jan Feb, your accounts stroke HR team will start asking you for investment proof. And all those who have not done their investments, they will run helter skelter to do that last moment investment. Or if they want to buy a health or a life insurance, then they will immediately call someone and ask their friend which policy tune liya hai, and they will do that and go online and buy that. But in that haste, you may end up buying the wrong policy. What is applicable to your colleague or your friend may not be applicable to you. Okay, so don't be in a haste, and it is a very important decision because you're paying something and you'll be bound with that policy for the tenure of the policy. Whether you're buying life insurance or health insurance, you need to do your homework very well. You need to do your due diligence very well and not be in a rush. So buy this, not in a hurry. Don't wait for the year end to be pushed by your HR.
No, think through and one size fit all. I mean, obviously that thing will not work. You have to work it with what you need, what your needs would be, dependence, all of that. I think all of that factors will also come into play. So the other thing was, we asked during the session also that how many of y'all would know where are the documents, policy documents, and all of that at home. So, how do you think, one can become more aware and keep documents and everything in place so that if unforeseen things happen, if something happens, so you should know that here are the documents, so what is it that you would recommend that women should do, and especially because otherwise, it's like, okay, he's taken it, mom, dad would have something. So, how there, what is it that you would tell, have a journal or make sure wherever you keep all the documents. So what would be that one advice that
So I'm sure, everybody maintains a folder or a place in your, in your wardrobe or a locker where you keep these documents. But it is important that whenever you're buying anything of this sort, the family knows. And, the family is also updated that what is the life cover, who is the nominee, what is the, procedure. So if there is an insurance advisor who is visiting you, you should, involve your family members in the decision making, and your family should know where is the life insurance document, where is the health insurance document. Today health insurance document, the policy covers also come online. There is a card that comes along with it, which is important at the, to be presented to the third party administrators, TPAs, at the time of admission in the hospital. So all these documents must be kept very close, handy, maybe in your first available drawer, which everybody knows where it is. Luckily today we have these digital cards which can be in your phone wallets or in digilockers, so that they are easily accessible. Okay, it is with you 24/7 in your smartphone. Okay, otherwise also your family should know that these documents are available, and it can basically serve the purpose. It should not be that the family is left in the lurch, or someone who is organizing all this is doesn't know what is lying where, so the whole purpose gets defeated.
True. So have a document, have that, one specific drawer or something that everybody knows if anything happens. That's the thing, because we wish कि वो वैसा कुछ नहीं होगा, क्यों ही गलत सोचे, but it's okay to talk and discuss and inform everybody in the family that here are the documents. If something happens, this is where you need to look for.
And one more
Yeah.
point, Ritika, that reminds me that I was working on an investment portfolio of a client, and he also presented us a portfolio of insurance policies which had got 56 insurance policies, and the premium payment mode was monthly. Okay. Now imagine if you have 56 policies and you're paying monthly premiums, then you need to have some kind of an auto debit facility. And imagine there are 56 debits happening and you don't know which policy is maturing when. So I would say that there is no need to buy so many insurance policies. And, and even if you are having something like that, you need to build some Excel tracker or something to ensure that every policy detail is properly captured and that you're paying the premium on time so that no policy lapses. So be very careful of not really loading up your portfolio with insurance policies, whether it is investment or term plan. If you have a term plan, you don't need more than 2 or 3. I don't think so you need. But even if you're buying anything which is linked to investment and you're buying every year because you want to save tax, ensure that it is all these documents are kept properly so that the family is not really hassled.
I mean, 56 is such a huge number. I mean, if God forbid something happens, I think people would not even know where to look for, what to do. It's all gone in waste then if it's not documented correctly. Just going back to the first question that I was talking to you about personal accident. So, the way you said for life, 15x or 20x, if you don't have dependents, and if either you have dependents, what is that rule or what is that minimum coverage that you should take for your personal accident cover or something? If we have a number or a.
So, like I said, personal accident cover will.
Okay. Okay.
So I think my mic was, I was not audible, but I am saying that your life insurance cover and your personal accident cover will be of the same amount. And
Okay.
while the personal accident covers are very cheap, so
Okay.
there's no you should not worry too much about buying that. And again, you can buy whatever cover you want to buy. There is no restriction unlike a life insurance cover. Okay. So you have that benefit in the personal accident cover.
Okay. So I'm done with my life insurance questions. Audience, if you guys have any specific, you could start posting them in the chat. But we will move forward and we'll cover health insurance section. And then during the Q&A piece, we will come back to life insurance or any other insurance specific questions that you have in mind. You guys can start posting. Okay, now moving forward to health insurance. So what is the difference between health insurance policy and your critical illness policy?
Okay.
Should I have both such? Should I have both or either?
So health insurance cover and critical illness cover works differently. Both are different, and should one have both? Of course. So I'll give you the basic distinction between health insurance policy and the critical illness policy. So health insurance policy actually covers your hospital bills. So if a person is hospitalized for any treatment of any disease and there is a hospital bill, that will be reimbursed by the insurance company. That's the health insurance cover. Now, what happens in the case of a critical illness cover? The critical illness cover says that if someone is diagnosed with a critical illness, and there's a list of critical illnesses that is covered in the insurance. So there could be 15 types of disease, there could be 30 type of diseases that are covered under the policy. And if the policy holder is diagnosed with that disease and he or she survives, say, whatever the period is mentioned, typically it is 30 days. So someone has a, say, a very serious kidney problem, and he or she survives for 30 days with that problem. Then if that critical illness is covered under the policy, then the entire sum insured is paid. Okay. So suppose someone had a 30 lakh cover and someone is diagnosed with a very critical, one of the critical illnesses and survives the period. Okay. Then the entire 30 lakh rupees is paid by the insurance company, even if the person has not undergone any insurance. He's not undergone any hospitalization. Okay. So even if for the first 30 days, he or she was going to the doctor and doing all the pre-consultation and not hospitalized yet, but it is confirmed that that person has the specified critical illness, then the insurance company will pay that critical illness cover complete. So that is now what happens is, if a person has both the policies, health insurance and critical illness. So suppose someone had a very serious kidney problem and he is hospitalized, and suppose that health insurance cover was 10 lakh rupees and the critical illness cover was 30 lakh rupees, and the person went for a treatment and spent 8 lakh rupees hospital bill, then that health insurance cover will pay the 8 lakh rupees cover, and the insurance company will also pay that the 30 lakh cover. Okay, if the patient has survived the waiting period. Okay, so what happens is, in this case, if a person is back home but not back to job, or is not in a position to start working, suppose he has to recover completely and he's not able to go or loses a job, or there is some 3 months waiting period or something, then he is not without a salary. And if he is not in hospital, but there is still some expenditure that he or she is doing for that treatment at home, then that critical illness cover becomes very handy. So that is where both complement each other.
Yeah, very well. Yeah. So there are all of us here, most of us on the chat, on the session also today, would be covered with, our employer's health policy. But what if somebody is self-employed or a homemaker? So what kind of health insurance should they be looking at?
So if someone is self-employed, then they need to buy health insurance cover. And I just want to make one thing, that every family member should be covered, whether it is a newborn, child, working, housewife, homemaker, whosoever, everybody should be covered. Because unlike a life insurance where we are saying, if someone is, if husband, wife, or their wife is a homemaker, then she doesn't need to buy a life insurance. The husband, who is the income provider, needs to buy that life insurance cover. But when it comes to health insurance, anybody can fall sick, including the child. So the entire family should have a health insurance cover. Okay, and if you're self-employed, then obviously you need to buy that cover, because if someone is in service, occupied as a salaried person, his most likely that the employer has provided some cover. So even if you don't buy your own cover, which you should actually buy, but at least it suffices that the employer has provided with the cover in case you fall sick, then there is something to fall back upon.
Yeah. So this is now moving to all the employees. Okay. So this is again a very interesting piece that, and I want to cover a couple of things that I asked you there. So, employer provided health insurance. Okay, what are the pros and cons? And how you know is it enough? What happens like if you switch jobs? Okay. And if you are given that, benefit from your employer, should you take an over and above policy to, cover you, your family, and your members?
So one thing is, what many people ignore uh, when they buy a health insurance cover is that they buy a very small cover. So typically people have a 5 lakh cover and they think they're done with, and it could be for the entire family. Okay. And even if say your employer has provided you a 5 lakh cover for your entire family. So if you're whosoever is covered in your family will know that. But just imagine if you're living in a city like Mumbai or one of these metros, or even tier 2, tier 3, where you want to go for a good hospital, and the 5 lakh cover may not be sufficient. Okay, because medical inflation is actually at 12%. So you have to understand that it's not the same as what we spend on food and all. So you need to have adequate cover. So when you have a cover from your employer, you should not feel satisfied that, oh, 5 lakh मुझे तो पैसा नहीं भरना पड़ेगा, मेरा ये खर्चा बच गया. You need to ensure that you have adequate cover. Now, unlike life insurance cover, there is no thumb rule over here. But what I suggest is that at least everybody should have a 10 lakh cover. And today, insurance companies pay you no claim bonus, which can really, which actually increases your sum insured every year. So, for example, some policies have a no claim bonus of 50%. So what happens is if you bought a 5 lakh cover and in the first year you don't have any claim, the policy goes up by say 50, the sum insured goes up by 50%. So your next year's cover for the same premium amount will be 7,50,000. And in the second year also, say there is no claim bonus, then your cover will go up to 10 lakh rupees for the same premium. So if you're hale and hearty and there is no claim, then you don't have to worry. There is your cover is automatically increasing. So you need to also, when you buy an insurance policy, you need to see what is the no claim bonus. Okay. But that makes it only 10 lakhs. So now when I say if it is 20 lakhs, is it sufficient? The higher the amount, better. But yes, it comes at a cost. Okay. So I just want one thing you should keep in mind is that while you have your employer's cover, should you change your job, the next employer may not give you adequate cover, or he may give you, if you're lucky, you may get a higher cover, or the cover is less. So you should not feel that I don't have adequate cover and you go and buy that cover. So I always say that when you should buy your independent cover for your family, and if you get over and above from your employer, nothing like it. Okay, so that is how you should basically look at health insurance cover. You should have adequate cover. And even if you have from your employer, you should have your own personal cover and ensure that your entire family is covered inside the cover.
And that only, what if, like you are switching jobs, you quit at a particular date and the next joining is sometime late and you don't have an additional cover, that can backfire for, if something happens during that tenure. Or what if for whatever reason you have to take a break? So it's always better whatever is employer providing over and above that, one should consider, buying policy for him or herself and the family.
Correct.
as you were mentioning that this thing you should, be careful of while taking policy, and, because there's no thumb rule. So any 5 things that you would highlight, which while buying an insurance policy, health insurance policy, one can, make a note of and one can be mindful of.
So yes, I think there are many points which should be kept in mind. But there is, like, first is that what is the cover that you're buying? That is known as sum insured. Now I'll also make one thing. There is, insurance is all about fine prints and jargons. So when you buy a life insurance, it is known as sum assured, and when you buy a health insurance, it is sum insured. Okay, so that is one difference. So when you're buying a health insurance, you need to be mindful of the sum insured. So if I say, if you have a 10 lakh cover and a no claim bonus feature, which increases, say, your sum insured by 100% over 2 years, then maybe you can start with a 10 lakh cover and maybe hopefully it will be 20 lakhs after 2 years. Okay, then that may be a sufficient cover, because suppose someone is very critically ill, or there is a very popular common diseases these days, a heart attack or anything of that sort, then there is, then that cover will be adequate. Okay. Now, should your entire family be covered? Yes. The 20 lakh cover can be for, say, the self, spouse, kid, and maybe if you want to buy a separate policy for your dependent parents, because if they are senior citizens and all, then there will be separate policies that will be available to them. So you need to buy that adequate cover. That is the first part that you should look for. Second is, you should look at exclusions clause. So when you're buying insurance, you should ask your advisor, what is the exclusions? Exclusion means certain diseases that will not be covered. Okay. So you need to be very sure that if you are diagnosed with a particular disease and you are hospitalized for that, and there's a bill, then if that disease is excluded, that treatment is excluded, then you may not get that. So you have to be very careful of, what are the exclusions in the policy. Third is what I mentioned about the restoration benefit. One is that that if someone is having say a 5 lakh cover and that person gets hospitalized and the entire 5 lakh is used, and suppose that person is again hospitalized, okay, for some other complication related to that disease, and again, has, say, a 2 lakh hospital bill, then in a policy without the restoration feature, that 2 lakhs will be paid by him because he already used that policy for 5 lakh rupees. So what happens in the case of restoration is that the amount that you have already used is automatically restored. That is the benefit of that feature. Now, of course, the more superior the policies, it will be expensive. But today, in families where there are multiple, if there are multiple people who have ailments or they are likely to be hospitalized repeatedly, then this restoration cover is a must. That is second. Third, then the co-payment is something that you need to look at. So a lot of policies come with a feature of co-payment, means that not entire hospital will be paid by the insurance company, but some of that will be paid by the the insured. So if, say, someone has a 5 lakh cover and there is a co-payment clause, and if the hospital bill is, say, 5 lakhs, then the policy may only pay 80%. That 4 lakhs will be paid by the insurance company and 1 lakh will have to pay by the insured. So you have to be very careful whether the co-payment clause is there or not. Some policies don't have co-payment clauses. So those are expensive policies, but you have to be sure that you know what it is. If there is a co-payment, your premium will be less, but you have to understand that something will be paid from your pocket. Okay, so that is the one more thing that you need to keep be mindful of. Then there is a waiting period. There is what is the waiting period? When you buy an insurance plan, health insurance plan, not from day one, all the diseases will be covered. So suppose you have a blood pressure, okay, or diabetes. then the policy will say that any complication, any disease arising from blood pressure or related to diabetes will not be covered in the policy, say for another 24 months or 36 months. So if there is any such disease that arises after 24-36 months, after the waiting period is over, then any bill related to that will be paid by the insurance company. But if it happens before that, then the person will have to pay the entire amount on his own. So that waiting period also should be checked, especially if you have any health conditions like a thyroid or diabetes or a blood pressure. So that is one thing. No claim bonus I have already spoken about. So you should look for the no claim bonus. Room rent capping is another thing you need to be very careful of. Okay. The room rent capping means that every day there is a room charge that is levied by the hospital. So suppose you are admitted in the hospital and you're paying 10,000 rupees a day or rent, and your policy says only 6,000 rupees a day, then the 4,000 rupees is going to come from your pocket. Okay. So some policies have that room rent capping, some don't have that. Okay. So whatever the daily, and then there could be upper limits for the ICU charges, per day ICU charges, room rent. So all these uh, should be looked at before you buying the health insurance plan. So these are a few of the things that you should be mindful of. That is why I'm saying that don't rush in only just because you want to save tax and you want to give the proof to your HR. Don't be in a rush, because you will be not mindful of these features of your policy and you may make a wrong decision.
No, absolutely agree. And I hope people have made a list of what all Sailesh mentioned. Um, so this thing, I was checking this online that if you've already taken a policy, okay, and later you find another one which has like better benefits, and though I was mindful of, I went through, all those 5 points that you mentioned. So is there a process where I can switch, or I cancel the existing one and start the other one, or should there be again, some waiting period
Sorry, guys, just a technical problem. Please be with us. Yeah, Ritika, you are on mute. Yeah.
Danish. Oh,
Yeah. Is it audible now?
Yes.
uh, audible?
Yeah, Ritika,
What I
you
was
are
saying
audible.
is that, Ritika, that if
Yeah.
you buy a health insurance plan and subsequently you decide to buy another one because the one that you bought does not have the feature, doesn't suit your requirement, and before stopping your earlier policy, you need to buy the new one. Okay, because it is always risky that if you have in the meanwhile, if you've got any health conditions, you may not get a policy. Okay, and your earlier policy may be covering you for that. So suppose someone buys a health insurance plan when health insurance and he's hale and hearty, but maybe after 2 years he got a diabetes and he wants to buy a new policy. Then the waiting period for diabetes could be 24 months. So the first policy is still covering you for diabetes related ailments. So you should not, surrender your earlier policy and buy a new one, because you will be running that risk. So you have to be very careful when you want to discontinue the first policy and buy the new one. Okay, so it's a very thoughtful decision that you need to take.
Okay. So you need to check the details and then only, stop the earlier one and avail the benefits of the newer one that you've found. The other thing was the floater as a option, floater policy. So is it a good option to buy policy, specifically when you are trying to buy one for a family?
So there is a individual cover and there is a so normally what happens is, suppose I have a 5 lakh cover for myself, 5 lakh for my spouse, and two kids, 5 lakhs. So at a gross level, I'll say I have got 20 lakh cover. I'm paying premium for that. But then each individual is only covered up to 5 lakhs. So if suppose one family member is admitted and they use that cover, then the cover available is only 5 lakhs. But if I buy a floater policy for 20 lakhs, and depending upon, suppose one family member in a year got hospitalized and that family member spent 7 lakh on that treatment. Another family member got hospitalized and spent 8 lakhs. Then together the family cover that has been used is 15 lakhs in that year. There's still a 5 lakh cover left. Okay. So it is always beneficial to buy a floater policy than a individual cover.
Okay. This is a valid thing. So can the maternity, so this is my last question here, then we'll move to the Q&A. Can the maternity benefits be added to your regular health insurance that you've taken? And if not, if yes, and what should be, what is it that women should be mindful of while buying the policy?
So when you're buying a health insurance cover, the maternity charges are covered. So there is a big, it's an important event, and these are covered, but you will have to see the waiting period. Normally, the waiting period is 9 to 12 months in most of the policies. So if someone is buying a policy, need to be very sure. Okay, so that is one thing. Then the second is that regarding maternity, what are the charges that are going to be covered? What is the, because then separate clauses, because it's maternity is treated very separately by all the health insurance companies, and you will have to be sure that what charges are covered, what kind of surgery costs are covered. C-section will have a separate, any complex surgery beyond that could be, will have a different cost, and that may not be covered. So all these aspects have to be studied before you buying this policy with even with respect to the maternity clauses. And of course the prenatal, the postnatal charges, and some policies even cover the child. As soon as the child is born, the child is also covered. And in case there is any complication, the child is undergoing any treatment for any infection or something, that cost is also covered by the policies. So you need to be very sure that which policy you are buying and what are the features related to the maternity.
Okay. Okay. So it's always about read the fine prints,
Absolutely. We
and
say
do
the
your
devil is in the fine print, and this is the aspect about insurance that many people dread. They don't want to read. Literally, it is fine print, firstly, and it is full of jargons, and many people don't want to read. And many times it talks about death, disease. People refrain from, getting into it. That is why you said, no, shub shub. So they don't really want to, get into it.
Yeah.
But I think it's an important aspect of financial planning, and risk management is absolutely important. People should take that extra pain to go through the fine print and ask all these questions to your advisor before signing the check.
So I think it's okay. It's okay. People might find it boring to go through those details, but there's no harm. Like, when we started the session, we mentioned that 70% of women depend on their partners or family members. It's okay to depend, but at least Be dependent there and understand what is the policy and just be aware that all these things are covered. So you don't want to, just leave it as is. Just participate and understand that whatever we discussed today, whatever was highlighted, we are able to at least be mindful of these things and have discussions around it and know where are those documents, where are those policies. So, if something happens, you know where to go, who to reach out to. Now we'll move to our audience. Over to you, guys, ladies. Uh, Send in your questions. We will address them quickly. I will read out to Selish, and then we can get him to answer those. So, okay, that Meeta Shah just made one thing that actually term insurance should be made mandatory. I agree absolutely. Okay, there's no insurance for her. Women premiums mostly depend on husband, so mostly there is no separate insurance for her. Okay, I don't know what is that. Prakash ji, what are you saying? I didn't get there. Sana, are room charges and bed charges interchangeable? Also, does both include the doctors and nursing charges of, or is it always excluded? So this is again for health
Okay.
insurance.
When you say room charges includes your bed charge. So when you say room, now you have to be very sure that the room charge is a separate charge. And when your doctor comes visiting you, that will be a separate charge. So the hospital will have the room rent. The doctor, when he visits the room, that consultation charge will be different. Now, depending on which room you are in, if you're in a say single room, the doctor's fee will be different. And if he comes into a twin sharing room, the doctor's fee will be different. The same doctor, but the room, because depending upon the room charges, the doctor fee will be different. And, you know, everything will vary. So, yeah, that room charge is very important. So, you'll have to be very, very sure. That is why I'm saying you'll need to read the fine print.
Okay, next one we have, how do I decide? Okay, how do I decide which one? So if I'm planning to take insurance, okay, now we spoke about both life and health insurance. Which one should I prioritize first? If I have limited,
So
say,
both are priorities, but once, you should first buy your health insurance and then maybe you can buy a life insurance. Like I said, the probability of falling sick is higher than dying.
dying. So be prepared if you fall ill. Don't hope that you're going to die. So take your health insurance first and then your life. If you want to prioritize. Otherwise, if you have, resources, so whatever we discussed today, go list it down and get both the policies. Can I buy an insurance plan for my daughter now that will help her later in life?
So should you buy a life insurance plan if she's a minor or is small, not really contributing to the finance and all, there's no need to buy a life insurance for her. The point is that life insurance should be bought by the breadwinner or the one who is earning in the family, the earning member in the family. Okay. So when your daughter grows up and she starts working and there are dependents on her, then it's when she will need to buy life insurance for herself.
And insurance plan. So I don't know, Velsha, if we've answered. So considering life insurance, obviously she's young. She doesn't have dependents and you don't. Any other health insurance, yes, you should. I think she meant maybe, any policy which could give benefits. So if you want to add in there, Velsha, or if we have answered to your question, then well and good. Why is it important for women to have their own insurance even if their spouses are already covered?
So like I said, the one who's earning needs to buy a life insurance, not the spouse who is not working. If the spouse is also working and both are equally contributing to the family income, then both need to buy a life insurance. But it is not necessary that if a spouse is not working or not contributing to finance, then the spouse need not buy a uh, life insurance cover.
Okay. How do I know if I'm underinsured or overinsured? I think we did cover this. But again, Sailesh, you can reiterate the point.
So, like I said, you need to know your human life value. There is one very precise way of saying that what is the value of my life. Okay, more often than not, it will come to your 15 or 20x of your income. So we are using the thumb rule, and you need to die by 15 times the income that you earn. Okay.
So, what should I do if I already invested in a policy that I now realize isn't sufficient or right for me? So again, I think Sailesh, you can answer in both the context, life and health.
So if you thought that you bought a wrong policy, now there are two ways of rectifying this. One is that if you bought a policy and within 15 or 30 days, which is known as the free lookup period, you can surrender that policy and you'll get your premium back, and you can go and buy the right policy. Okay. So that is one way of doing. Second is that if you bought a policy and after say 6 months you realize that this is not right policy, you can buy the correct one and discontinue the previous one. So that is how you should basically. But like I said, when you are discontinuing one policy, you need to buy the new one and then discontinue the previous one, whether it is life or health insurance.
Earlier question only, room charges and the bed charges. She's just asking. So the limit is for the room charge only, right? When the policy mentions room rent limit, doctor, nurses are excluded in the charges. I didn't hear this.
No, so like I said, the doctor fee is very different.
Shailesh, you are on mute.
Okay.
So there may be no capping.
You're on mute.
Okay. I'm saying the doctor's fee may not have a capping, but the room will have a capping, and depending upon which room you take. So suppose what happens is, I'll tell you, if say your room charges 10,000 and the insurance company is only paying you 6,000 rupees per day, then you're covered only for 60%. If your doctor visiting charges 1,000 rupees, you will get only 600 rupees. Okay, from insurance company. So everything will become proportionate to the room charge.
Guys, is Sailesh audible in the comments? You can just say yes, no.
Am I
Yes,
audible?
yes.
Okay. I think I'm audible now. Any other question, Ritika?
Just the last one. Term insurance में plan अच्छा होता है या accidental? And EYZ वाला.
1 second. I am not getting the term insurance.
I think term
So,
insurance. I didn't.
I think
take
both covers are important. Term insurance has, comes in handy if there is a death. Personal accident comes in handy when there is a disability. Okay, so that is how.
We're done with all the questions. Great. So thank you, Sailesh, for those eye-opening insights. And a big thank you to all the women who joined in. And if there's one takeaway from today, I'm pretty sure today's session should be सिर्फ शुभ शुभ बोलो नहीं हम थोड़ा शुभ शुभ भी कर लेते हैं तो अभी please go back, check the policies, take that action and be informed and take the right policy, ask the right questions and just get involved in your financial security, overall financial security. And make just remember that insurance isn't a fear-based product. If you go to see, it's about love and self-respect. So just think about it and hope today's session was valuable to you all. And if there are any more questions or anything that you would want to know around the topic, you can send in your questions in the comments and we will reply to those. So thank you so much. Thank you, everyone.
To everyone.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.